I don't know if you call that spicy. That might be like lame, right? Like
Well, I wasn't going to call
Sandy,
you lame.
myself, Sandy needs more sleep apparently. Sorry about that, guys.
All good. What do you got coming up for us?
Oh, we're going to be looking at some of the switching of the sectors, looking at UNH, J&J, and KO.
All right, that sounds awesome. Options trading made simple with maybe a slightly tired Sandy. We'll see. It starts right now.
Thanks.
Welcome back, traders. This is Sandra with Trading Made Simple. I'm here to show you short-term proven strategies. People think trading is a one-size-fit-all market. It's not. We live trade and train daily. Let's talk trading.
Benzinga. So as we take a look at the charts, and we're just taking a look at basically the market breadth, right? Really nice to be able to just look at this snapshot and say, what do we have in store for us? And you can actually see this changing throughout the day. So you could see all the major hitters, all the mega stocks, they're down. And look at Lilly and Mark. Look at healthcare right here. Really looking nice, right? A lot better than anything else. What else we got? Coca-Cola and PepsiCo. Look at the utility sector right here, guys. All green on the utility sector. I don't want to put my cursor there because it'll just block it, but you could see the utilities on the right, all green. So this is very interesting to note that we do have money moving into different sectors, and these are defensive sectors, right? This is where money gets moved to when there's like, okay, wait a minute here. What's going on? So let's get over to the charts. We'll do an overview and then we'll maybe do some automations today. So as we take a look at SPY on a daily chart, look at how momentum is just now crossing, right? That zero line. When we cross that zero line, momentum is weak. And so this is actually a really nice time frame to see this actually just breaking below. Because as you can see, how long can we go underneath that, right? We could go for quite a while. Now, this was a pretty big downturn. We'll see if we get that. But as I look at my chart right here, the first thing I see is, we may come down and test, right? This March 13th low right here. And that would be a double bottom. And the next decision will be, well, do we bounce or do we break the bottom and make a lower low, right? So as I take a look at this, you can see that, let's talk about confluence. I typically like to look at momentum. We crested above the zero line last Friday. However, we came and touched the 20 EMA, which is my favorite, like reversion to the mean. You could have your VWAP or, several EMAs, whatever you gravitate to that helps you to visually see price action is great. Everyone is different. It's very subjective in that way. But as I look at the 20 EMA for reversion to the mean, so we broke down, kind of did a hop up, we went sideways, then we did another hop up, going right into that 20 for the reversion, right? And then you could see how it toyed with it, which is typically a fake out zone. All these, areas of support and resistance, they act as fake out zones. And so when you think of it like that, what it does is it just helps you prepare your expectation that, wait a minute, we may get a pause here and not necessarily just a clean breakthrough. And as it broke through the 20 on March 25th, you could see that we came right into the pivot low. I mean, it was just perfect, right? It's amazing that these levels work. And we came right back down. So for the last 3 days, we have been down and now we're cresting below that zero line. So this actually looks good, right? To come and retest March 13's low. And what is that? 549.68. So that's what I would be looking at. You could see the market makers actually identify what the weekly expected move is going to be, right? So that's what all these brackets are for, is the weekly expected move. And you could see that each and every week they were expecting, during this period of time right here, they were expecting the market to go down further, right? You could see the stepping stone down. And then all of a sudden, you could see the market makers are showing us that there could be some consolidation, right? That our zones, instead of going up, was actually more sideways. That can help you identify if you're not good at forecasting or chart analysis or all of this. You can actually take a look at that weekly expected move and visually see, looks like we might be going sideways here again, right? So that's what we did right here and right here. And now look what the expected move is for next week. So depending on where we close today, we can then identify what our expected move is. So for right now, it looks like on the upside is around 569 and on the downside around 548. Meaning if the downside is at 547, let's just say, remember it's a zone, 548. So you can actually see, and then the low here on the 13th was 549. We could break through a little bit, right? Test that zone, right? See where momentum's going to be at for next week. So real interesting to note. And really how this works is the higher probability is that when we close today, we use that closing price. That price will then be this white line right here. And then that will actually identify if on Monday we open above that white line, we're just opening above point of control, because that white line is point of control for next week's move. That's how I look at this indicator. By the way, I offered this indicator via email. We had a couple takers last week, so I'm really glad. If you like this to me is just really easy versus going to your trade tab as an example. I need to get that lined up. Going to your trade tab and then looking at your weekly expected move over here, right? That would be 14 points, and then drawing the lines on your chart. This just makes it easy, and it also accounts for volatility, and so that's actually quite nice. So it does the calculation for you. Now, if you're interested in this indicator, just email me, Sandra@tradingmadesimple.org. Happy to get that over to you. Now, so if we on Monday then break above that point of control for the weekly expected move next week, probabilities is that we're going to be going higher, right? And if we break below it, probabilities are that we're going to be going lower towards our weekly expected move on the downside. Does that mean it has to happen? Absolutely not. Look at this week right here, just for training. Look at this week. We broke above it, didn't go anywhere, broke below it, didn't go anywhere. Boom, 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 right? And then that next Monday, we just hopped up, we opened up there. You couldn't do anything with your automations, by the way, right? When we have a big gap like that, all your automations just go down. One of the great questions about automations this week because of that big gap is what do? I really wanted my automations, something to happen. I'm on the edge of my seat for my automations to happen. And I just laugh at this because I just think to myself, the whole purpose of automation is so that you don't have to have all those emotions involved in your trading, so that you could just set them on the weekend and forget them all week, right? So that you don't have any real, emotional stake. You have your defined risk for each one of those trades. If they trigger, they trigger. If they don't, no worries. I'll be back next Sunday to do the same thing. And as you develop this system, then you can see, wow, I can actually go enjoy my life. I can actually participate in the market, and it's not as stressful as maybe it used to be. So with that in mind, we are looking at SPY. Big down day today, right? Wow. So let's take a look at the Qs. The Qs, we got also breaking below the zero line. All these are going to mirror each other, right? And what did we do? This is interesting. So on the Qs, not only did we hit our expected move for the week, but we also hit our expected move for the downside. So not only on the upside did we hit that on Tuesday, but now on Friday, we're hitting the downside. So that is volatility in action. And today we're above that 20 mark. Whenever VIX is above 20, stand by for these types of moves, right? All right. So then outside of QQQ, you got IWM. Let's take a look. Down $3.64. You could see also IWM hitting its upper expected move this week. And now we're heading towards that lower end. And that lower end is around 199.29 thereabouts. So we could get there today. Let's take a look at DIA. Big down day today. Wow. All right, this is interesting. So we broke through this vertical trend line right here. We bounced, we hit it, we came down, we broke above it, fake out zone, came down, and now we're actually right at our lower pivot. I do like pivot points. And so as we're at our lower pivot, we'll have to see today if this actually holds as support or if we break below it at the end of the day. Now, this little zone area, I would have to say is around the 418.50 mark. That's what I'm going to be looking at. Right now, we're already below it. But if we can stay above that pivot low, we could take a bounce next week on DIA. Now, some of the high flyers, let's take a look at some of those that we typically, right? So Meta too on a daily, looking really weak here. Actually, wow, $17 guys today. Big move on the downside. It hit its upper expected move this week, but did not hit its lower. We still have several hours of the market to go. Could this get to 575? Yikes, I don't think so. But it definitely is going lower here. And you could see that that little area is going to be it's a consolidation zone right here that's matching up perfectly. You talk about confluence, matching up perfectly with the weekly expected move right there. They just line up right together. So that little area is around, 575, I would say. So could we, gosh, that would be a huge move for Meta. Let's go to NVIDIA. NVIDIA looks like, it broke below its weekly expected move. And this will be interesting to see. Typically speaking, when we break below our weekly expected move, higher probabilities that the next week we just go lower. So when you think of it like that, you're like, wow, this could be a good short for next week. So let's just make that note so I can remember to come back to it for an automation. And then let's take a look at Apple. So on Apple, you got, let's see, this pop down, consolidation, popped back up with consolidation, not bad. We're actually looking at that 219.13 as an area of our last pivot low. This could take a bounce here. Let's take a look at that. Ooh, interesting. On a daily, Apple has momentum above the zero line. So not only did this consolidation on the higher end look interesting, but momentum is above the zero line as well. Apple kind of holding its own here, guys. Could take a little bounce. And you could see that next week's expected move is 225.14. We've already taken a couple trades where, the whole market is looking terrible. And then there's just a couple stocks that look stronger than the others. And, I have to say, just based on my experience, those technically don't last. They'll have relative strength for a period of time, but not long enough where you could really profit from it. So I think I'm going to skip Apple on this one, but it is looking much stronger than the other ones that we noticed. I'm hoping that you can see that. And if you have any questions, let me know. Let's see here. And then outside Apple, let's take a look at Amazon. Amazon just breaking the zero line right here, coming down. I don't think we'll reach it today, but you can see that we're basically, on the road, it looks like, to basically hit this level again and to test it, to test that support level. Now, remember, every time we come here, it's like, hey, is this going to hold? At some point, it may break through, and then that's going to look awful for Amazon. Let's take a look at Google. Google in a rush. We're in the negative 200. So if you have an oscillator that's showing you momentum, and why should you? Well, momentum drives price. So if momentum drives price, you should have an oscillator on your chart that's showing you momentum, okay? Because it actually happens before price. So when you can see that, then it can help you kind of identify, will there be a bounce here or maybe not? So let's look at this, and I want to show you these areas of confluence. So not only is price right at March 18th's low, which was 156.72, we are there right now, guys, there right now. What could we do here? Well, this either becomes, we're at a double bottom right now. So what happens at a double bottom? Well, either it bounces or it breaks through. So right now we're at the 200 level. And why is this important to me? Because typically speaking, when we're at a negative 200, we're oversold. So are we oversold on Google? Look at Google's consolidation for the last 3 weeks. Google looks interesting, but its momentum is really low right now. So if Google takes a bounce, it's probably going to do a reversion to the mean trade right up to the 20 or thereabouts, that zone area, which is around the 167. I'm going to just mark that real quick. And let's take a look at some of those stocks that we saw on Market Watch. Let's take a look at some utilities, or we can just Let's take a look at XLU, the whole sector. That's more like energy though, isn't it? XLU. Let's take a look at, well, let's take a look at that. All right, so yeah, this is utilities. So we can take a look at price action here, and you can actually see this is an ETF, and yet this looks pretty decent, doesn't it? We have momentum not really breaking the 100 level, so really kind of choppy and sideways. And now it's on a day chart, it's breaking up above the zero line. This is interesting. Now price is right at the 20, so we're right at the reversion to the mean. However, we had a higher low. This could actually maybe meet, and look at this trend line right here, really kind of matching not only next week's high, but also this band, which is basically identifying a level of consolidation for a chart, for a time frame. So this looks interesting to me on XLU. Just give that a little mark. We got a couple interesting ones. Now let's take a look at NH, because we can see that how bright green it is, right, on the market watch right here. Look at Merck. We'll take a look at Merck too. J&J. Let's take a look at a couple of these names. These definitely are sector, right? Sector rotation. So J&J. J&J looking really good. Not only a run up, but even when it pulled back, it wasn't very strong. And you can see on a day chart, even though momentum was weak on a day chart, you could see that J&J really just consolidated. This actually looks like a really strong chart, and it just broke through the zero line. That actually looks good. This is J&J. And let's take a look at Coca-Cola. Coca-Cola, kind of similar, right? Even though the momentum, that's how you can actually kind of tell, you know how the move is going to be, is when you take a look and see, like, on its weakest point previously, on its weakest point, where did price go in comparison to where momentum went? So even though momentum went down, price actually held its own, right? So this is real interesting to see, this as we take kind of a look at all the different charts. I'm hoping that you can see the different patterns. Sometimes it'll take you some time if you're into, price analysis and charting analysis, is to identify these things. But I think once you can see it, it starts to make more sense, and you won't be second guessing yourself so much. You're going to win some and you're going to lose some, and that's just the trading game. But as long as you have a strategy in place where you have a risk defined trades, I think you're going to be okay, as well as risk management, right? 1 to 3% of your portfolio value in a ticker. So looking at Merck, I don't really like this chart very much, but as I see, it broke out of a downtrending channel here. It went sideways, but broke down to come test it again. And so now you can see that the weekly expected move, right, kind of holding its own right at this vertical trend line. We do have momentum that's coming up above the 100 line, which shows that it's kind of recovering, So I think Merck will get a recovery here if the rest of the sector does, but I don't like it as much as I do J&J. J&J just looks like a really strong chart. Looks like it's, ready to go meet its previous high. We had a high here on March 4th. We had a high here on March 10th. So we did a double top. We came down, not with very much force, even though momentum was weak. We stayed true to the 20, vacillating. Could we have another vacillating week? Absolutely. Because what is the weekly expected move telling us? We could have another sideways week, but a little bit higher, inching up a little bit higher, closer to that pivot high, because it looks like it wants to come challenge that again, right? And if it challenges it, it could break through, or it could come back down. But this is looking really strong. So I do kind of like this. Let's see here. So next week's expected move is at 167, 164, $3. Let's take a look at the trade tab. I'm going to get this fixed here. There we go. And if we take a look at 7 days out, we have a 167.5, 167.15. That's not bad. Let's see here. You could see that right now these contracts are going for about $46 for a call. You could take a call, you could take a debit spread, knowing that we might go sideways a little bit more. I don't know. You know what? I think I may go for this long call. Now, should we automate this to hit a certain area? I don't think so. I actually like this. My automation would be if we got down to 162.80, then that would be something to take, just cut it. So as you can see, we actually touched on an hourly, which is a pretty important area. We touched a double high from a couple days ago, and we came back down. So it is holding as a resistance. So on an hourly chart, 164.05, we can make this really tight, guys. And I think I will. So let's see here. 164.05 is my stop. So I'm kind of saying, hey, I think this might break through. So if it breaks through on an hourly, right, you can really feel the strength to go for into next week. Now, because it's Friday, we don't know what's going to happen today. We don't know what's going to happen with the news over the weekend. Let's take a look at automating this trade. So if I was to go to J&J, and I'm going to pick the 167.5, and the reason I did is because that's technically my target price, right? And I'm going to say, hey, buy custom with an OCO bracket. And when I come up here, right now, of course, the contracts are going to be $51. Now, I'm not going to do an automation to get in this trade. I already know I want in. But what I want to do is set my stop. I want a real tight stop. So because of that, I'm just going to come down here to my sold limit, and I'm just going to click in the boxes, mark. This is going to be at or below because we're going for a call. And we have that area at 164.05. And you know what? I'll just give it to the 164. I'll give it that extra 5 cents. If it breaks below that, I'm out of this trade. I don't want to stay into it. I am going to do a good till cancel, but it's not letting me. I must have too much energy going on. We do want this as a limit, but we always want this as a 0-0 because we're going to be aggressive buyers and buy the ask and sell the bid. However, until you actually click that little tiny button to get this trigger, you won't be able to. So now I'm going to say bid, make sure again, this is 0-0, tab out. And let's see if it'll let me. It won't let me, but that's okay because I can do it on the front side. All right, so we have a tight stop, trigger, and we're going to say good till cancel. All right, so we have our stop in place, like, you know, really, let's see here. So if we have a tight stop on here, I'm going to do a limit order on this, and I'm going to say, okay, what was my take profit? 167.5, right? So what I'm going to do is I'm going to come over here now for my take profit, and I'm going to just do this, and I'm going to say at or above. Now, if you get lost here, all you got to do is look down here, greater or equal to, and we're going to say 167, and it was 167.5, but I'm going to go for the 167. Let's do 25. I'm going to get out just before. Okay, 167.25. And then we can say good to cancel. It's not letting me. Hit that little tiny button. Everything is about tiny buttons on thinkorswim, guys. I hope you recognize that. I'm going to do a 0-0 here, and I'm going to sell the bid. Okay. So we buy the ask, sell the bid on your automations. We're just being aggressive buyers and sellers, but we're not paying market, okay? This is not letting me do it, but I can do it on the front side. And you can see what your programming actually states, right? And you can also see where it says price of the security is greater or equal to, and that's our take profit. So now we basically have a limit order. We stuck it as a limit order and not a stop. And that's okay because we're doing it from the stock price. We could do it that way, or we could actually put a stop in. So I'm going to leave it as is, good till cancel. I want to make sure this is good till cancel. We're going to give ourselves some contracts here and let this go. So make sure we have 3. We have our take profit, our stop loss. Let's see what this actually says when we confirm. So if we just open this up a little bit, you can see it says, hey, get me in right now. I'm buying the ask. So we didn't do any adjustments. Sell me when I get to my close price because I see a really narrow zone right there at 164. So that only gives it about 24 cents. We'll see if it makes it. And then also get me out if it hits 167.25. 125. We have good till cancel, so this will go good for all week. I'm in the trade, and so are you. And it looks like we got our automation in. We'll see how it goes for next week. Hope you guys have a great weekend.